Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the Morning Market Prep video for February 1st, 2024. Well, we had quite an interesting day yesterday. The FOMC disappointing the market. Things started to sell off pretty quickly after Jerome Powell's statement where he let everybody down, saying there probably wasn't going to be a rate change by March. And that's one of the things everyone has really been counting on here as we continue to press stocks higher and higher and higher in the market in kind of a just a wild race to the top side. So what happened overnight? Well, let's take a look at that. We had Asian markets mixed but mostly lower. Shanghai continuing to fall, down a little more than 0.5%. And we ended up seeing Hong Kong actually rising. It was the leader. Well, no, actually it wasn't. South Korea was the leader. But we saw South Korea and Hong Kong rising. The rest of the markets were lower. Let's take a look at Europe this morning. Europe this morning is mostly lower. They had some inflation data come out, and their core numbers disappointed them a little bit stronger than expected. And so we have a little bit of bearishness over there in the European markets. If we take a look here at the U.S. markets, well, we're trying to bounce already this morning here. Now remember, this is very early. We're going to fluctuate around here today as data comes out. But right now, we've got everything trying to push up in the futures with the Dow just ever so slightly, basically flat. But NASDAQ is trying to get a pretty good bounce back here this morning in the pre-market. If we take a look at oil numbers are also moving back up. Yesterday we saw them moving down. They're moving back up. We continue to see this Middle Eastern crisis spreading, getting more complex and wider, and that's having this negative effect on those oil prices. So up just across the board there, even natural gas is just a little bit higher this morning. Then if we take a look at our bond yields, interestingly enough, as the market, with the market doing what it's doing and reacting to the FOMC, they're still driving the 10-year bond yield down. This morning, the 10-year bond yield is at 3.94. The 2-year continues to hang in there about 4.23. So kind of an interesting situation. It would be essentially the market suggesting, we don't believe you, Mr. Fed. We think rates are going to fall. So we'll see on that as we progress, just realizing that we're still extremely bullish in the market and just want to ignore anything that is negative. However, today we do have some big tech reports, and there's a huge anticipation for those, and we'll talk about that in just a moment. So what does all that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Thursday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts, see if we can gain a little bit of information about how we might want to approach the market for today, and realizing we want to shake off a little bit of bias and really take a look at what's going on here in these charts. Well, first off, bearish engulfing candle here on the diamonds yesterday, and obviously that probably raises just a little bit of concern in the market. But remember, a bearish engulfing candle one day does not make a trend. So we need to see a follow through to that candle, pushing on through to the downside for that really to show us maybe a potential toppiness here in the diamonds for a short period of time. If we don't get a follow through to the downside, well, probably doesn't mean anything at all. Probably means we're going to go into more of a consolidation. Now, if we do pull back, continue this pullback, well, notice we've got some support levels right in here that could easily be tested. Falling through that, we're likely coming back here to test this price support in the chart on the diamonds. So if the bulls can find inspiration in the data today, then pushing on up, probably a retest up here is where I would want to be looking first to see if we can break through that, and then blue sky highs above. If we take a look at our SPY, pretty rough day in here. Gap down, pushing on down to the downside. That is an ugly little pattern there in the chart. Pretty rough. You can see here in the pre-market we are trying to pump this back up. Remember, big ugly candle like that, if we cannot follow through, may not mean any all that much. So if the bears continue to find inspiration today, notice there's a little teeny tiny little bit of price support in these two little doji candles right here. But if those bears push on through there, well, notice we've got a little gap here. And then that possibility that we could push right on down here to this level in the market. And unfortunately, that would be a pretty painful pullback and would probably raise a little bit of fear in the market. One thing that was interesting is you want to notice here on that selling wave yesterday, there was a pretty big chunk of sellers that come in. And like I've been saying, just be prepared for those big point moves that are possible here in the market because of that uncertainty. And this extreme run that we have seen to the upside. Those PE ratios continue to be extremely inflated, and we want to consider that. We've been seeing earnings maybe showing us that we cannot quite support some of these high prices in the market with those earnings results. So let's take a look at if the bulls find inspiration here today, then that possibility we could push right up, and right in here is where I'd be looking for that resistance. Notice that that kind of matches these three candles right here, and if we can push on through there, then right back up here to the top, and then we know there's blue sky above. Let's take a look at our QQQ. QQQ gap lower and continued to sell yesterday, but we're trying to get a pretty good pop here in that this morning, saying, yeah, we just don't want to go down. We've got those big tech earnings this afternoon, and we're highly anticipating those, and so we're trying to push back up here in the market. If the bulls can continue that push, first off, we need to try and break through yesterday's resistance high in here, and then we'll try to push on up into the next little level here of that chart for resistance. Keeping in mind we've got some areas above that. As we push on through, then we'll be looking to come back up here and test these highs, and then blue sky above there. If the bears continue to find inspiration, then I would look for that possibility that we could come down into here, testing the low side of that big candle and back down here into that trend. Now, keeping in mind, if we slip below that, we're likely going to fall into a little bit of a gap here, and we could come lower in the chart. And of course, that's going to test some better support or stronger support in the chart, and then the strongest support is going to be down in here, which would be a pretty substantial pullback, and probably have folks a little fearful for a little bit in the market. If we take a look at our IWM, IWM also had a pretty nasty reversal here yesterday. So once again, we're continuing to struggle with this line here, this downtrend break line. Pushing back down here yesterday below that level, failing. So now the question is going to be, if this rallies back in here and fails once again like we did over here, rallies back and fails, then this area will turn red again in that chart, showing us that resistance. Can't say that that's going to be the case. We might push right back through, but let's watch that carefully. So if the bears were to continue to find inspiration today, look right in here, we've got a little price support right there that could potentially catch us and hold. If those bears push, if they break down through there, unfortunately though, there's not a whole lot in this price action here that I really don't know that we could count on much, and that possibility we could stretch on down into here. Now maybe not all in one day, but kind of keep that in mind. That would be kind of a painful pullback, but it would be a good test of price support. Now, if we find that bullish inspiration today, first step we want to see is if we can get back above this resistance area in the chart. Can we get back up through there? If we can get back up through there, then a retest of these resistance highs up here looks possible. Then, of course, anything beyond that would be pushing us up into that next level of resistance that we've been struggling with so much. Again, pretty good shot of volume yesterday in the markets well, the Fed disappointed us. We kind of got ahead of ourselves, and I've been warning of that for some time, that the market was getting ahead of itself here. And now Jerome Powell is saying, no, I don't think you guys are right. I think we're going to hold these rates a little bit higher longer than you would expect. Let's take a look at our VIX. Our VIX yesterday had a pretty good rally in it. That fear and the sell-off at the end of the day really started picking it up here a little bit. Now, if the bulls, what they suggest in the futures, are not going to extend that fear today, we're going to likely see this drop back down the way the futures are suggesting. But let's watch that carefully. If they push us back down, we've got a support level here that if they can get really, really bullish, we'd have to break back down through here and back down into some of that little bit more complacent area of the market. If the bears continue to find that inspiration here today, I think the critical thing will be breaking through some of this resistance up here, pushing up higher. It's been a while since we've seen the VIX running up in those areas, and that's a little bit of a higher low here. We've just been gradually moving up here, and if that fear really starts to pick up, we'll just keep in mind that's where those big point moves in the market can crop up, and they sneak up and bite you pretty hard. Let's take a look at our T2122. The T2122 indicator is a 4-week new high, new low ratio. And yesterday we were pushing up into this area here. We were getting up there pretty good. And then, well, that selling came in hard yesterday and pushed us down substantially into the close. So if the bulls can find inspiration here today, we've opened up a pretty good opportunity if we can find it. And there's reason that they could with some of it's a big day of earnings today. So just keeping in mind, there may be that opportunity. We could pump this right back up to the upside on that earnings hype. If the bears, however, were to come in with some inspiration here today, then look for that opportunity that we could continue to drop this down and get down into that bearish reversal zone here in the market. Let's take a look at our T2108, which is the percentage of stocks above the 40-day moving average. See, yesterday was pretty hurtful here. We dropped below the 50% area here in the chart. It's just that all at once move. And again, I've been suggesting be careful for those big potential moves, because we have been so uber bullish here in the market that we're not willing to see that there might be some pitfalls out there. Well, we kind of tripped and fell into one of those pitfalls yesterday, dropping pretty hard. There is some price support in this area. So if those bulls can grab a hold today with anticipation of those big tech reports, well, maybe we can bounce back up in here and see if we can retest some of the resistance levels here in the chart. So all is not lost here, but it's just one of those shows that that maybe sometimes we kind of get carried away and a little bit too emotional about the overall market, and we extend things too far. Let's take a look at our T2107. Same thing showing here on T2107, a little bit of a pullback in that, but it wasn't as catastrophic as it was in the percentage of stocks above the 40-day. The percentage of stocks above the 200-day did a better job. Notice we didn't break this low in here in the chart. So keep an eye on that. If the bears continue to find a reason to push this down, I would suggest that possibility we come down here and test that 50% area. Could be a likely thing. But if the bulls bounce right back up, well, we know where those resistance levels are on the chart. We can see them right here, and we could easily bounce back up into there if we can find enough inspiration. Let's take a look at our T20-101. Well, T20-101, interestingly enough, most of the day was just nothing happening in the market. Selling come in all at once at the end of the day, so we ended up actually seeing a breadth decrease overall in the market, even though we saw that explosion of volume on the bearish wave. So be kind of careful here. If this were to turn up and the bears were to continue to push, that could be a little bit of a problem for us. Same is true if the bulls have enough inspiration today and push this breadth back up. Well, maybe yesterday's selling was just a one-day aberration and nothing to be majorly worried about. Let's take a look at our economic calendar here in the market. Our economic calendar, we certainly have a few things to be paying attention to here this morning. We're going to be getting our Challenger job cut report this morning. We've got jobless claims to be paying attention to. Let's take a look at those really quickly. They're suggesting that they come in at 214. That's flat over last time. I think there is a chance we're going to start to see these numbers creeping up with some of the big layoff numbers that we've been seeing. For example, UPS laying off 12,000. Those numbers start to hurt after a period of time, and I think we're going to start maybe seeing some of those start creeping up here. And that's in favor of the Fed, that the Fed will start cutting rates. So keep that in mind. Now, productivity and costs will be coming in today. We're looking at those coming in at 2.3. That's a pretty substantial decline from our last reading there, but we're seeing unit labor costs moving up here, 2.1. So again, a little bit of data that may not be very helpful on the day. PMI, looking at that to come in, consensus is looking at 50.3. Remember, anything above 50 is showing us that expansion. You can see what we've got right here is literally stall speed on manufacturing here in the United States. And then the ISM manufacturing, we're looking at that coming in at 47.4. I think that's just kind of a punt by those consensus makers. They're not sure what's going to happen and just kept it flat from last month. Again, that would be below 50 and showing us that sector of the market is continuing to contract. If we take a look at our construction spending numbers here this morning, consensus is looking for 0.5, a little improvement over last month, 0.4. So quite a little bit of data this morning. We're going to then get natural gas, some bond auctions, and our Fed balance sheet later on today that they are going to hold at that higher level. There was some anticipation that the Fed was going to start backing off on the QT quantitative tightening, but not so much. They're going to continue rolling off the balance sheet at $95 billion a month. And then as we look into Friday, just keep in mind we get that employment situation number. It's not uncommon that the market kind of hesitates as we go into that number, so watch that carefully. Motor vehicle sales are in there, consumer sentiment. We've got factory orders coming in on Friday, so boy, this has been one of those wild and crazy weeks. Now if we take a look at our earnings, and I'm not going to be doing a blog here this morning, guys. Just had too many things going on here, and I have not getting to it. So here's a list of today's notables. As you can see, we have quite a few notables. Apple, Amazon, and Meta will all be reporting after the bell today, and that's what I was suggesting, that there's probably a huge anticipation on those earnings coming in. Now, hopefully they do a better job than we did on the last round of big tech earnings, because we saw a little bit of selling coming in after those, so watch that. But keep in mind, we've got quite a few others in here. We're going to hear from Altria. We've got BZH and BDX coming in here. We're going to hear from CLX this morning. We've got DLB in here. We've got AG, HOLX. We're going to hear from Peloton today. So we've got a lot. SkyWest, we've got a lot. Tractor Supply is in here. A lot going on here this morning on that earnings calendar. And that's going to provide either bullish or bearish inspiration. So make sure you take a screenshot of that if you want that full list of notables. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me that quick favor, if this is the first time you've seen these videos, well, click that subscribe button and also click that bell icon so you'll be notified every time I post a video. And if you believe the video was worthy, if it was helpful to you, if you could please do me that favor and that click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. That helps a ton. Thank you so much for everyone who does take the time to do that. I truly, truly appreciate it. Let's take a look at some of these stocks setting up. And remember, guys, these are not recommendations to buy or sell any security. You need to do your own due diligence, be very, very careful in this market, and make sure you're following your trading guidelines and your risk tolerances. You should never, ever just take someone's hot tip trade. You should always follow your personal rules of trading and never ever blindly follow anyone else's trade ideas. So first off, let's take a look at some of the telecommunications here in the market. Boy, look at what happened to AT&T here. AT&T just shooting right up after, an earnings that kind of disappointed here in the market. And we've been seeing a lot of that. We get an earnings report that disappoints the market, and it immediately becomes a buy again. And I mean immediately. I mean right after the sell-off of the first reaction, we start buying it back up. So AT&T showing this nice move here to the upside. Now, I wouldn't want to chase this, but any rest, consolidation, or pullback would be an opportunity to maybe pick that up. Keeping in mind, this is a very strong dividend payer and might be worth it. Now, we are approaching a major resistance area here in the chart on AT&T, so I would look for that to hesitate or pause as we push up in there. However, let's take a look at Verizon. Better type Verizon though. Verizon, nice little consolidating pattern here after breaking through some resistance in the chart. So you can see we've broke through a major resistance area here in Verizon, and we're just kind of resting that pattern here sideways. Now our trend is out here. That possibility that this could continue to rest all the way out to here does exist, but let's watch for that possibility that this could push on through, and you'll notice that we've got some pretty good upside potential. The next resistance in that chart would be up in here, and there is that possibility. That's not a strong resistance that we could continue to push and come all the way up into here on that next move in Verizon. So I'd keep an eye on that, and as you can see, I've alerted on this chart, and I'm going to be watching this pretty closely for a potential entry into that trade. Right now it's looking pretty good. Let's take a look at Walmart here for a second. Walmart surging yesterday, trying to break through this resistance. Remember, this is going to report on 220, but we heard that news that Walmart's going to do a 3-for-1 split, and seemed to inspire the market yesterday to really gap up and move higher. You guys know I've been calling this since down here, and there we go, right up through that next resistance. So now, if this were to consolidate, rest, or pull back and hold in this area, then look for that next opportunity that we could continue to stretch into that earnings report on Walmart. Looking pretty good overall. Take a look at some of the defensive sector stocks here. They have struggled and struggled and struggled for a while, but take a look what happened here in Hershey the last couple of days. We popped up through this consolidated area here, resistance, and we may have given ourselves that opportunity that we could be starting an upside trend. We need this to hold in here and watch that closely. Hershey might finally be making a move in here, and I saw other stocks doing kind of the same yesterday. If we take a look at Schmucker's continuing to move to the upside. We're seeing some of that defensive sector really starting to pick up here in the market, and today we're getting earnings from a pretty substantial old boring company, and that would be Clorox. Keep an eye on that in here. If that can break that resistance and hold, well, maybe we can start that moving to the upside. We have certainly seen some really good price action here on MDLZ. Yesterday, its earnings reported gap down, and there's another one of those examples, gap down and immediately find buyers. So watch that carefully. There is that possibility that we could push right on through here on MDLZ, maybe breaking that resistance, get up in here and hold, and we can continue this upside trend. So watch that closely on Mondelez. Let's take a look at some other areas of the market. First off, if we take a look at Apple, be really careful here with Apple today. There is a lot of concern that Apple may not have the sales figures. Remember this, we're already 4 straight quarters of declining sales here in Apple, and this last rally created this little bit of a lower high. We're breaking back down through these support levels in the chart. Be just a little careful and cautious here today. Don't assume anything is assume anything is possible, I should say. Any rally back up in here that shows us some kind of a failure is an opportunity, I think, to short Apple. So be kind of careful here on that one here in the chart. Let's look at AMD. AMD, there's another example of we disappoint on earnings, and as soon as we get past the earnings, it's buy again. We push this right back up, but I want you to watch this really carefully and closely. If we were to rally back to some resistance in there, you can see what I just drew in that chart is a possible head and shoulders top. So watch that carefully here. We're starting to see a little shine come off of some of these stocks, and we'll want to be watching that carefully for those next potential pullbacks in the market. I'm not suggesting that's going to happen, just suggesting the possibility is there, and we will want to be paying attention to that. Let's take a look at what happened in our big banks here. Wow. Our regional banks all of a sudden yesterday, whack. They were setting up for a potential upside move. They'd broken that downtrend, looking good. They got smacked pretty hard here, breaking this support level in the chart. So let's keep a pretty close eye on this now. With that big gap down, that possibility of any rally back, we would be looking for that next opportunity maybe to pick up a short there. And watch that carefully in KRE. Those regional banks are starting to show maybe just a little bit of uncertainty here, confusion in the market. Take a look at MDT. MDT making that nice move finally. It took forever in here for that to finally get going. We broke through some resistance in the chart. So now any rest, pullback, consolidation in here, I would look for that next opportunity there in MDT for that move on higher, keeping in mind it is going to report on 220, and that's something we just have to keep checking on those over and over and over here in the market. Take a look at PayPal. Now PayPal has been, boy, this has been an ugly stock for a long time. This thing has just been driven down, and it's been missteps by the company that's created that problem. And taking a look in here, as you can see, breaking down below this trend is not where I want this to be. If this can break back above, and we had that nice little pop that was starting to happen yesterday, and then the selling yesterday came in and pushed us back down. But if the bulls are going to ignore this and push us back up, holding up in this area here would set up that opportunity maybe to start relieving some of that pressure to the downside. And it would be that clue that institutions are going to start coming in and backing this company just a little bit at these prices. We'll have to wait and see, but I do think it's worth paying attention to and keeping an eye on. Also, take a look at stocks like CCJ, uranium. Well, there we go again. We had a lot of volatility in here and then pop. We're seeing CCJ getting a nice move here today, pushing to the upside. You'll want to keep an eye on that. You want to realize it's going to report on 2/8, but boy, getting a nice little shove here to the upside. And things like UEC, I am holding UEC, so I have a little bias in here. A lot of volatility came in here on that entry, but now I'm right back in this trade looking good, pushing back up here this morning. Now, I wouldn't rule out that possibility. We may still have to rest out here toward trend, and that CCJ earnings report on the 8th could have a positive or negative effect on this. Right now, though, I'm pretty happy with my position here in UEC, so keep a close eye on that. So with that, everyone, hey, I want to wish you all a fantastic day. Thanks so much for being here. I do truly appreciate it. Just be careful, be safe today. Remember, we've got some big numbers after the bell. There'll be a lot of anticipation on that. Expect considerable volatility, and we still need to be really careful and watching for that potential of those big point moves if we disappoint. Remember, Friday morning after we get Meta, Amazon, and Apple, Friday morning is likely going to be a gap open or gap down gap up or gap down open. So be prepared for that. Make sure you're planning your trading carefully and you understand the risks that you're taking in a market that is so volatile and so sensitive at the moment. I will see you right back here bright and early Friday morning, and I wish you, as always, all the very best. Take care.